And good afternoon. Welcome into Market Talk for this Tuesday, December 14th. Thanks so much for joining us and making us part of your day. I'm your host, Jesse Allen. Find us online, markettalkag.com. That is our home on the web. You can find the links to our YouTube channel for the video stream of the show. You can also find all of our audio streaming sources there as well. Find everything online, markettalkag.com, broadcasting live once again from our Fargo studios here today. Plenty to talk about. We got the Fed meeting underway. A lot of worries about that. A lot of worries about inflation. What are they going to say about monetary policy coming up here after the meeting concludes tomorrow? We got good strength in soybean meal today. Overall, not a bad day in the grains. Let's talk about all of it. Let's bring in our good friend Brian Splitt with agmarket.net joins us here today. Brian, good afternoon, sir, and hope you had a great weekend.
I did, Jesse. Thanks for having me back.
Hey, appreciate the time as always, Brian. Let's jump right in. I want to start with soybean meal. That was the star of the show today. Really good, strong moves in bean meal. 14.80 a ton higher in the January contract. 20 some dollars higher in that December contract. I mean, just really strong moves in this meal market. That spilled over into beans today.
It did. Go back to yesterday. That was a very negative day for soybeans. We were down sharply, extended those losses in the night session. And if you just look at soybeans specifically, we have the lows that were made in the month of November. Those are what would be our fall lows thus far. And if you just draw the simple uptrend from those lows, that's where the January and March soybeans went overnight. We tested that uptrend line, started to come off of those lows this morning. And like you had said, meal was extremely strong. Meal had traded below yesterday's lows early in the night session before closing above yesterday's highs. So you do have an outside day higher. Meal also made some new highs for this move. So we did take out the November high, the monthly high during the month of November. So all in all, it was a very good structural day for the meal market. And I think, when I look at the weather forecast this morning, it didn't really offer much different perception than the last day or two for Argentina. But I got to think that end users are out there, looking to avoid, having to pay substantially higher values if the dryness in Argentina persists. Argentina grows soybeans. They do not export the soybeans. They export the meal. And if we do see things evolve further, where we see hot and dry in Argentina, then the meal market's going to take over leadership of the soy complex.
Well, and I was very impressed as well with just how strong meal was at the close, and how beans hung in there a little off the highs on the day. But all this as well in the face of soybean oil, which was under pressure today with some of those outside factors, crude oil lower, and some of those other things weighing on the energy markets a little bit today. Although we have come off the lows there, but it was really impressive to see meal help out soybeans with all the pressure in bean oil. But we have seen that dynamic here lately in the trade, haven't we, Brian?
Right. So, Jesse, I think if you were to rewind, 6, 7, 8 months ago, it was the opposite story, right? Meal was weak, and boy, soy oil was strong. And we really started to see the unwind of that spread, and it's getting more and more aggressive as we end the calendar year here.
Well, I want to talk as well. I mentioned the energy markets and all that stuff, and monetary policy, and we'll get to that in a second. Looking at corn though first, we know that we got to kind of maintain this ratio between soybeans and corn, fighting for acres in 22, and corn hung along with beans today. I guess I didn't see much else other than corn just kind of having to tag along today. That was really under that corn market. And I think the other thing too overhead is that $6 resistance. We tried to bump up against it today, and then we fell back off of it. What's your thoughts with the corn market? Would you agree with that, or is there something else underlying there that helped today?
Well, so yesterday corn was dragged down by soybeans, even though wheat was positive. And corn wasn't down materially, but it was lower. And it was lower this morning when everything was down, and then it saw soybeans go to sharply higher. Wheat came back to unchanged to slightly higher, and that allowed corn to come off the lows. I do think that corn has its own story. When you look at the spreads and you look at where December will expire relative to the March, and you look at the carry between March and May, and the fact that May is trading over July, and that just does not seem to be the structure of a market that is extremely well supplied here, where we've got all the corn that we need. So I think end users, similar to the meal, you think back to the spreads that we had this past spring in April and May of 2021, where May corn had traded 50, 60, 65 cents over the July. And as we approach this January quarterly stock report, I think with the strong basis in the country, that's telling us something. I think the way these spreads are trading are telling us something. I think the end user wants to avoid a similar, repeat. We don't want to see the sequel to these major inverted spreads. That's not good for them. So I think they're trying to get their coverage here early, especially as we again look at that South American weather forecast, and that was a big driver to why we saw such an inverted market last spring with the drought on the safrinha corn crop in Brazil. So as we're starting to see some of these weather concerns persist and evolve into a little bit more as we get deeper into their growing season, I think that's driving these end users to take that action. Now,
Well, you mentioned
above $6, that's a big breakout. If we can do that, you're taking out the long-term downtrends. You're taking out that high that we made in August at 5.99 3/4, which was on the August WASDE report when USDA surprisingly dropped yield much more than expected. So I think a corn board bid over 6 is going to go take a look at contract highs and potentially make new contract highs down the road, warranted, based on South American weather or our own domestic weather story.
that's exactly where I was going to go next. Was you mentioned trying to get coverage here, and I think I haven't heard anyone who is on the opposite side of this fence. It seems like everyone is under the belief that if we can break through this $6 glass ceiling, corn has a lot of room to run above that mark right now, Brian.
It does. I think from a technical standpoint, just looking at the ability, if we do it, to take out several months worth of highs after going through harvest, being able to take out, these downtrends that have been in place since May and June, that's a very, good, strong move if that came to fruition. And it's the same thing, whether it's March, May, or July corn, all of them have built resistance up at $6 over the last several months. So if we can get the whole board out to July, bid $6 plus, I think you're going to see this market find new buying through technical interest. And I think a lot of the trade just really thinks that because of the way the spreads and the base have been trading, that the stocks are going to come in tighter than what the USDA is leading on right now on that January report.
Real briefly in wheat, it feels like just a lot of consolidation maybe in the wheat markets here this week. Is that your feeling with what you're seeing just throughout all three wheat complexes?
Yeah, again, with the year end approaching, I think we are seeing some kind of squaring. So for a while, we had a point where the winter wheat was really leading things to the upside. That last leg higher was all winter wheat. Spring wheat really just went sideways in that time frame. And so as we approach the end of the year, the winter wheat's giving back some of those gains that it made versus the spring wheat. Overall, they're all still holding the big picture long-term support. So I wouldn't say that any of the wheat markets have, said, hey, that the top is distinctly in. And you got to remember, when we were at these price levels last time, you would see the wheat market make 75-cent moves up and down, and it was just how the market traded. So getting the market to pull back 50, 60, 70 cents off of highs, recheck some of the old support levels, recheck some of the old highs. As long as we're not taking out our uptrends and holding horizontal support, the market still looks good. I think a lot of this is going to depend into 2022 of what the stage is that the Fed sets tomorrow. I think there's a lot of the trade that is going to be analyzing every word, analyzing the verbiage of their statement, and whether or not it leads us to believe that we've got more inflationary forces moving forward into 2022. But as excited as we could get about the spreads and basis and the possibility of corn going above 6, monetary policy can change all of that. It can change the fund's interest and ownership. It can change their belief in how strong inflation may be or how long it may last. And so this is also an area where you got to realize we are at resistance and we haven't taken it out yet. And so this may be an area where it might not be a bad idea to just have some puts under the market, just in case there is a shift in the overall narrative to inflation because of the Fed.
Well, and you mentioned the Fed, and it feels like despite some of the positive moves we saw on Tuesday, it feels like there's still just kind of a little bit of a worrisome feel over the markets, wondering what the Fed is going to do when they wrap up meetings on Wednesday, thinking there might be more of a hawkish tone taken by the Fed. And you alluded to some of it there. Are you worried about what the Fed could say tomorrow? Having a very negative impact on the commodity markets and maybe some money moving to the sidelines?
Uh, am I worried? I mean, I don't really worry about the market in general. It is what it is. I just think if it's an event that we know about that does pose a risk to the ownership in the market, from a sentiment standpoint. And so, if we're managing risk, which is what everybody in this office tries to do, we are just saying, hey, this is a risk to the market. This is where we are. We're up at resistance. This is probably a good time to manage that risk in one way, shape, or form. Whether that means buying some puts for the next several weeks as we approach the next major report, or maybe it's letting go of a little bit more cash and just changing our ownership into a call type of a position with a known risk. But we just have to recognize really that the Fed can change the tone of the market very quickly. And I think we've seen the equity market today really show how concerned it can get. I mean, when you had the NASDAQ down over 300 points, S&P took back a lot of last week's gains. This is all in anticipation of what the Fed might say.
Brian, let's shift over to livestock. This hog market down today moderately. That December contract going to go off the board. February going to take over at a premium on the board. Do you think that could be good for hogs here, or do you think we could watch that February contract slip back down to where December's at right now, around that $72 mark?
Just say I wouldn't be surprised to see hogs set back a touch, but I do think that we may have made a good, strong low this month so far. And I do think that if we do get a little bit of a setback, it should be a decent opportunity for some ownership. I'm a little bit more focused on some of the summer months, maybe the June contract specifically. Got some call ownership there, and I think we've got the potential to see some higher values out there.
And what about over in cattle? I think there's starting to be some worries there. Cash trade is starting to level off or maybe trade slightly lower. It sounds like we got plenty of cattle forward contracted through the holidays now. Cattle futures today, we were down a little bit. Some of that probably in the face of higher grain prices, just some of that back and forth trade we see typically. But what's your thoughts in cattle? Are we up against it here a little bit, or do you think we still have a chance to maybe move a little bit higher yet?
I look at yesterday's trade, and I know there was some short covering and open interest went down on that move, but I still respect what it did on the chart. February live cattle had a really large outside day higher. It had taken out some support. You look at February live cattle and some of the strong selling that we saw after the new COVID variant came out. We had some lows that were made when we saw those waves of selling, and yesterday we traded below those lows just to finish higher on the day and above the previous day's high. And it was a very good reversal on the day. We also took out what would be kind of this downtrend off of this last major peak. So I think the market today, we bit off quite a bit yesterday from the lows. Seeing it set back a little bit, not a surprise. And I think what I'm looking at is if we can get February, maybe back into the mid 137s there. I think that could be a spot where they again look to try and own it and just use yesterday's low as the point to risk. But I think the live cattle also look constructive on the chart, and I'm looking for some higher values to come yet.
Brian, great stuff as always. Any other final thoughts out there? Anything you want to reiterate to folks here as we're working through the front half of this week?
I think this would be a good opportunity for the listeners to hear that we're going to be putting on a conference We're going to have two conferences, Jesse. One's going to be in Indianapolis, and the other's going to be in Kansas City. And I would just say go look at our lineup online. We've got the itinerary out there, www.agmarket.net. There's a banner on the top. Click on the banner for more information. You'll get the dates, the itinerary of who's speaking, what they're speaking about. And we've got a really good lineup this year for both locations.
Well, and it does look like a great lineup as well. Glad you mentioned that, Brian. January 31st in Indianapolis, February 7th in Kansas City. And again, as Brian mentioned, agmarket.net for more information. I know folks can go there as well. They can check out the app or they can give you guys a call if they need a little personalized help with their marketing, can't they?
Absolutely. 844-4-AG-MARKET. So 844-424-6758. That gets you anybody on the Ag Market team. And if you want to speak to me directly, it's 815-665-0463.
Well, Brian, we appreciate the time. As always, thanks for joining us here this week on the show. And we will look forward to talking to you again soon. Have a great one.
You too, Jesse. Thank you.
Brian Splitt with agmarket.net. That's going to do it for the Tuesday episode of Market Talk here for this December 14th. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.